Okay, my name is Simon Matter. I'm the Managing Director and Chairman of Prime Financial Group. So today, let's start with who we are. What's Prime all about? So first of all, we are a firm operating across 4 key areas, being accounting, wealth, corporate advisory, and SMSF. So in totality, we're an advisory and capital firm with 130 people operating across Melbourne, Sydney, and Brisbane. And we run a centralised services structure out of Melbourne for IT, finance, HR, and marketing. And this has allowed us to scale our firm in particular over the last 4 to 5 years. But our overall purpose is all about empowering our clients and our team to achieve their aspirations. Let's talk a little bit about the financial highlights for 2022. So impressively, the team were able to deliver a 15% increase in underlying EBITDA, an 18% increase in revenue. That's all been organic revenue growth. An improvement in reported EPS, up 14% to 1.93 cents per share. That would have been up slightly higher if it hadn't been for the subletting of our Melbourne office space. So it would have been closer to about 30%. But we also increased our full year dividend. That was up 57% to 1.1 cents per share. We maintained our operating margin at 30%. We reduced our debt by 26% to about 0.7 times underlying EBITDA, or debt of $5.2 million. And we continued to increase or improve our operating cash flow. It's actually up now almost 4 times from 2019, but it was up 11% to 6.1 million in 2022. Impressively, since we have repositioned the business in 2018, Prime has had consistent growth across all of our key metrics. So underlying EBITDA has increased from about 3.7 million in 2018 to 7.8 million in 2022. The reported profit after tax has gone from a loss to a profit of 3.8 million in 2022. EPS has gone from 0.77 to 1.93 cents per share. The dividend has increased. It's increased to 1.1 cents per share in 2022, up from 0.7 in 21 and 0.45 in 2020. And the share price has increased from 12.5 cents in 2018 to 17 cents on 30 June 2022. But today it's currently around 24 cents. So how are we growing this firm? So our goal is to increase our revenue from 26 million to 50 million over the course of the next 3 years. We're going to do that across 4 key areas from both an organic and inorganic point of view. And recently, in fact, actually on the 4th of October, we completed an acquisition, which I'll talk a little bit about in a moment. But organically, this has been impressive what we've been able to do over the course of the last 4 to 5 years. Across all 4 service lines in FY22, so accounting, wealth, capital, and SMSF, we increased organically how we were growing those areas. Now, we're doing that in a couple of key ways. We've got partners in our business that are out there finding new clients, and we're also delivering additional services to our existing client base. We're also doing another thing, point 2 here. We're attracting new revenue contributors. They're people like accountants or advisors that have an existing client base, and they're looking to join a group like Prime that has additional services and a place where they can start to earn some equity in our business. That's an important key differentiator for Prime, and it's worthwhile noting that 44% of the ownership of Prime is by key management and staff. All team members, after being with us for 12 months, start to earn equity, and that's a key way that we're trying to attract talent within our business. We'll also do point 3, which is continuing to roll out new service lines. The 2 most recent service lines that we rolled out were corporate advisory 5 years ago and SMSF around about 4 years ago. And I'll show you the trajectory of those 2 key service lines on the next few slides. Acquisitions, as I mentioned before, is the 4th pillar of our growth strategy to get to 50 million of turnover. And we were really pleased to complete that transaction being Intello in the SMSF space. And I'll talk a little bit more about that in a moment. So Intello, as I mentioned before, the 4th pillar of what we do is SMSF. And within that space, we have identified a great business that we acquired on the 4th of October. It generated or generates $3 million of revenue. It will contribute around about $900,000 of EBITDA for our business. It's highly EPS accretive. The purchase price was 4.6 million, with 70% paid up front and 30% in the 12 months following. But importantly, what this has done for our SMSF division is provide us access to a whole new client base and also to scale the SMSF revenue as part of group revenue. SMSF revenue will now go from being 10% to 20% over the following 12 months. So let's take a quick look at the 4 key service lines I mentioned before and how they've been growing over the last 12 months between 21 and 22. You see accounting and business advisory has increased by about $500,000 over that period of time. So good organic growth, 5 to 10% there. We've also seen the wealth management division, which currently has about 1.1 billion of funds under management, increase from 7.6 million in 21 to 8.5 million. So that $900,000 increase has been pretty significant growth. The corporate advisory division, which has been only established in the last 5 years, is now turning over $4.5 million and is a key way that we differentiate in our core client segments of businesses, corporates, and also family groups. SMSF I've mentioned, so I won't touch on that in any more detail. Obviously, as part of our total shareholder return, we look at what the share price might be, but we also look at the dividends that we pay to our shareholders. And you'll see on this slide here, we've had a great trajectory over the course of the last 3 to 4 years. And we are forecasting that our dividend will increase from being up 57% in 22 to being up a further 36% in FY23. We pay out about 40 to 60% of our earnings, and we paid out 52% in FY22. With respect to our outlook for FY23, we are seeing continued growth. We are seeing or expecting to see revenue grow by a further 15% in FY23. We're expecting our underlying EBITDA to grow by 5 to 10%, EPS 15% plus. We'll continue exploring all 4 of those opportunities we've seen across the different areas that I mentioned before, inorganic and organic. We see about 60 to 75% of our growth coming from organic initiatives and the remainder inorganic. As I've mentioned, the dividend will be up a further 36% in FY23. Debt will remain modest at 0.5 to 1 times underlying EBITDA. We'll continue with our buyback that we've had in place for 12 months. And we'll also focus on making sure that our team are aligned with great client service and ensuring that they have an ownership stake in the future we're trying to co-create together. So how we think about our investment case at Prime is really in these 9 key final points. So continued growth in earnings and a diversified recurring revenue stream that allows us to make longer term decisions about our growth. We'll continue to maintain strong margins at 30%, plus or minus 1 or 2%, and good cash flow. We've done a recent transaction which is highly EPS accretive for us, being Intello, which I've mentioned. There'll be further opportunity for M&A, and we'll be able to scale our structure to ensure that we're able to drive the right amount to the bottom line. The buyback will continue, and we are in an industry, point 6, that has continued growth around professional services. Importantly, also in times of distress or challenge, in particular over the last 3 years, we've seen our business grow through the pandemic because people need advice. Dividends will continue to increase as mentioned, and interestingly, we are trading at a lower multiple than our peers, so that presents an opportunity for continued share price improvement. And as I mentioned before, having the business 44% owned by key management staff is a really important differentiator to attract and retain talent. So that's the investment case for Prime, and that's what we see over the next 12 months and a great opportunity to participate in that. Thank you.